The market is up huge today, but can we trust this move, especially when we've been seeing back and forth moves for the last few weeks? We're up in the morning, we're down in the afternoon, back and forth. Let's talk about it. Today's big move up is off of the idea that the market is looking towards the potential progress on trade deals. However, overnight, China said that there were no trade talks taking place. Those remarks came after President Donald Trump said he is willing to take a less confrontational approach towards trade talks with Beijing. Treasury Secretary Scott Bessent said Wednesday that the U.S. has the opportunity for a big deal. Chinese imports are subject to a U.S. tariff of 145%. Equities were supported this week by President Trump's remarks that tariffs against China would not remain at 145%. Basically, a step down from the ledge, if you will, when it comes to these tariffs. And in my video yesterday, I discussed just how hard of a market this actually is, because you're getting good news one day and then ugly news the next, but I'm still waiting on that price action signal that I've been talking about on the channel for some time when it comes to the NASDAQ. We're off to a great start here with a potential higher low forming, but I would love to see that breakout above that 90-day pause level that we keep talking as a major level of resistance. You can see we acted as support in that level. We then found support there briefly before crashing lower. And then even though we had that really exciting big up day, we actually found sellers in that region. So from a bullish perspective, I really think we need to see a confident closure above that key level of resistance before we can say, okay, the bull trend is back on. That being said, I do have several stock positions already that I've been adding to my portfolio into the dip for the long term. So this is a nice little bounce back that we're seeing, and I would love to see it continue higher. And last night we got the latest round of investor sentiment survey data, and you can see that the crowd is still very scared. We've been at a record multiple week. In fact, I think this is the longest stretch in history that we've stayed over 50% of market survey respondents saying bearish, going back to like the 1980s or whenever when they first started doing this report. So we are seeing record uncertainty, record fear in this market, and that to me sets up the potential for a massive short squeeze if we see any progress further on trade deals with China. And I said this yesterday in my video, and I want to reiterate this. If you get some sort of news that Donald Trump and the president of China are going to have even just a phone call, the market would probably be up 5% in the day. That is my best guess of what would happen. But this market is so positioned, so bearish, so negative. Anytime you're getting good news, the market is popping dramatically. And we're living in it right now. Why I always say it's really hard to short indices, because the market gets really scared and any good news is like a spark on gasoline. So from a price action perspective, when we look at the NASDAQ, I'm looking for a breakout here, and any sort of retracements, I'm a buyer. And here's an updated look at all of my current positions in the stocks that I've been buying: Apple, Airbnb, American Express, Google, etc. We're having a good day today, bouncing back nicely. Currently, the P&L for the day is up about 1.16% on the portfolio. But for the sake of transparency, you can see that this year to date, has actually been kind of a rough year for me. And it's been a rough year for many investors. You can see so far this year, I'm up only 3% on my portfolio. Meanwhile, the S&P 500 is down about 7.5. Getting back to market sentiment for a second, we can see the put to call ratio is still very elevated. Investors are very spooked by this market. And again, this goes back to my concept of a potential short squeeze starting to unfold in the equities market. And just a heads up, the EdgeFinder sale is ending very soon. If you have not already taken advantage of our 40% off discount, you can find out all the information down below in the description. And if you use the first link in the description below to speak directly to our support team, they'll be able to offer you an additional extra 5% off of your purchase. So brings you up to 45% off for a limited time. The reason we do that is so that you can ask any questions that you have about the EdgeFinder before purchasing, so we make sure it's a good fit for you. The EdgeFinder allows traders to easily source a large library of economic and sentiment data, finding trends and opportunities in the market much quicker and much easier. I use it every single day in my trading, and it genuinely has taken my trading over the years to the next level by automating so much of the mundane tasks of sourcing data manually every day. So don't miss the opportunity. This is the lowest price that we do all year long. Moving on to the dollar index, what we can see here is that we are still in a pretty confident downward trend. And I actually took this opportunity to pick up a trade on gold again. I'll talk about that in just a second. But the dollar dollar index still looks really weak, and I would actually be not be surprised to see that if we do actually bounce up into this 38.2% retracement zone, that you would see pretty quick selling taking place. Given the current macro situation, we do see a little bit of softness in U.S. Forecasts for recessions, and we see inflation cooling in the United States. So these things keep me on the bearish side of the dollar. You can see jobless claims came out this morning in line with expectations, basically giving us a neutral reading for both stocks and for the US dollar. And we're getting a 42.86% of our readings here pointing towards bullishness. So that's kind of less than half of these things pointing bullish. And what we can see is that, again, we're seeing cooling inflation data, which is definitely bearish for the dollar and bullish for stocks. By the way, you can see the US dollar impact here and the stocks impact here. What we focus on heavily is the actual data that comes out relative to analyst forecasts. So with the example of CPI year over year, we were expecting 2.6% inflation, and we actually got 2.4%. That is bearish for the US dollar and bullish for US stocks. This is a quick example of how using software to automate this analysis makes things way easier to understand without having to read 74 different articles each day. So I do remain cautious and pretty bearish on the US dollar overall. And so I actually took this as an opportunity to, you guessed it, get right back into my gold long trade. This time on the 4-hour chart and also with a smaller size than I previously took. And I wanted to talk about that just for a second, about my dynamic approach to taking trades. Now, what I mean by that is I do not take a strict like 1% risk per trade. I know that many traders do that and totally cool, but for me personally, I do have a grading system built into the EdgeFinder. So what I mean by that is when the EdgeFinder, let's just reset this really quick. So if we just click reset, when the EdgeFinder is giving me a bullish rating on gold, but the score is only a +5 rather than something like a +10 or a +8 or 9 or something, I may choose to take a smaller position size on the trade itself. So for gold, I did re-enter the trade, but my risk on this is smaller than my previous attempt. The second reason for why my position sizing might be a little bit smaller this time around is because I do still think that while the gold market is still very fundamentally bullish in my view, we are looking a bit stretched here. That does not mean that I don't think, we certainly, obviously I'm long, so I think we can continue for some time here, but I do acknowledge that there's a possibility that this is still correcting and we may actually see a push back down to a level like 3140, which is where I have my eye on a bigger potential position on the long side for gold. So the way I would map this out is I've taken an initial attempt on the long side here on gold, but I'd potentially look at the trade again or look at a new trade if we do get a larger pullback, at which point perhaps my second attempt would have a slightly larger position depending on what the EdgeFinder has to say. But let's break down this gold trade and why I took it here at this level. So yesterday we saw price come down on the 4-hour chart to this level of support, and we broke through that temporarily, and that actually triggered me out of my trade, causing me to trail out for a profit of, well, about $40,000 if you saw my trade yesterday. I closed it out and showed the final P&L on that. Then we bounced back, right? So we bounced back sharply. So clearly the way I see price reacting here is we had a pretty sharp reaction to this area. And unfortunately, I got stopped out kind of preemptively at a pretty terrible time. So this morning I said, okay, well, if you come back to that area, I'm probably going to take the trade and rejoin it. This time, however, with a smaller size, since I don't like this trade setup, I still like it. I still think it's worth taking for my own strategy, right? My own system, my own strategy tells me I should take this trade, but I don't like it as much as the trade that I took back here. And so what I've done is I've taken this trade with a slightly smaller size than the previous trade that I took. That being said, I have a stop loss just below this level, telling me that if we do actually go back and break that level, that is a clear indication to me that price action is straight up bearish, and then that would put in a lower high here. So again, I acknowledge we may still be in the process of correcting on gold. Maybe I'm wrong for taking this trade, but again, I don't really care. It's a small risk. I think that there is potential that we do continue to see uncertainty in markets and gold continue to thrive in that environment. And up until yesterday, I had about a 50-50 split in my personal portfolio. What do I mean by that? Well, I had like 50% of my portfolio sitting in gold and then about 50% in stocks that I liked. So I had a basket of stocks I showed you earlier in this video, my basket, right? Now what my portfolio is looking more like is not 50% gold, but more like 25% in GLD. And I have 25% in cash waiting to potentially either buy more stocks or to look for more opportunities, trades that I like as well. So I have a bit of dry powder going into the rest of this week, and we'll look for opportunities that show up within the EdgeFinder's top setups page. I talked about it earlier, but NASDAQ is on the watch list. I'm looking for a breakout in any retest around that 19,200 level on NAS 100. And today's video is sponsored by DNA Funded. If you are not already a funded trader and plan on being one or looking to become one this year, check out DNA Funded down below in the description. They do offer special discounts to our subscribers using the promo code A1T20. DNA Funded offers payouts in as low as 7 days. They offer profit sharing up to 90%. They have unlimited trading days on both their 1 and 2 phase challenges, and they allow you to trade pretty much anything under one single prop firm, up to 800 plus different assets. So if you're interested in learning more about DNA Funded and you are at the point in your trading where you feel you are ready to attempt funding challenges, I would encourage you to check out DNA Funded down below in the description and see if they're right for you. A couple other charts on my watch list here today are the euro dollar. I'm looking for a possible attempt to get long around this 1.13 level. I'd also be willing to potentially add or try again around this 1.09 level. We have EdgeFinder confirmation here, and as long as that remains the case, I'll probably be looking for euro dollar longs. Taking a look at the Kiwi dollar, I really like this chart, but waiting for a pullback here. If we can get one, it would probably be around that 38.2% retracement that I'd be looking for a possible long setup. Again, another EdgeFinder setup that I currently am watching. On the bearish side, I'm watching dollar yen, dollar Swiss, CAD yen, and Aussie Kiwi. And I really like this currency pair, the Australian dollar against the Kiwi dollar, but would probably be waiting for a good sized pullback before looking to get involved on this one. 61.8% level looks pretty interesting to me if we can get a larger pullback. And as far as dollar yen goes, I've watching this level for the last few weeks, still waiting to see if we can get a pullback up into that 147 to 148 level to initiate potential short positions. Let's give you bad and let's give you terrible. Okay, so here's bad. Bad is that we go into a really trench warfare in the form of a trade war that just takes a long time and there's no concessions on either side, and trade in the global kind of dynamic gets hurt. That is bad. But do you want to hear what terrible would be? You want to hear what gets gold to 5,000 in a hurry? You want to hear what goes, NASDAQ and S&P down 20% from here, 30% from here? Ready? Here's terrible. Terrible is China invades Taiwan in all of this and takes it from just a trade war to actual war. That's the black swan. They've talked about it for years. They have made that point many, many times. And let's just hope that that doesn't actually happen. But if the trade war with the United States goes on long enough and gets bad enough, and things are already severed so much, China might make their move on Taiwan. Okay? That's the black swan event. That would send gold, in my opinion, that sends gold to 5,000. That sends the S&P 500 30% lower. That would be the black swan event. But here's what I'm getting at. You ready? Because this is the important part. I don't think you can bet on that. People have been saying those things for years. Okay, so here's where practical trading, practical investing comes back into the picture. I just mapped out the doomsday's favorite topic right now on YouTube. The doomsday YouTubers, the traders, investors who love to sell that fear. Right? I just mapped out. You can see how interesting this topic is. You can see why those types of things get so many clicks. That's a black swan event that you, in my opinion, can't base trading around. You can't base your investing around because you can't call that. And even if you say you think it's going to happen, okay, great. When's it going to happen? In a month? 6 months? 12 months? 2 years? 5 years? 10 years? What are you going to do? You're going to short the market for the next 10 years? Right? That is a silly thing to try to call. So while that's fun to think about and it's a fun experiment to go through in our heads here, we can't call that that's going to happen, and we don't know that that's going to happen either. So what can we do? again, you can theorize all that stuff and you can make those those are what I call, I stay far away from that stuff. That is straight up massively speculating on what's going to happen in markets. You're making a wild bet. And if you're right, there's like a 1% chance you're right. If you're right, you make a ton of money. But 99% of the money, 99% of the time, you miss out on big moves. You lose a bunch of money trying to short. So that stuff is fun to talk about and to think about, but it's not something I actually can base a trading plan and strategy around. So what can I do? Well, I can focus on what I can focus on, which is market sentiment's already reflecting terrible stuff's going to happen. We have an economy that seems to be holding up okay. We have a top setups page that's giving me the idea to stay bullish on things like NASDAQ, Chinese stocks, which is a fascinatingly high risk idea that I want to look into more, not as in the form of I'm not going to take a big position, but it's an aggressive idea that if there's US-China relations that improve from here, the Chinese stock market and the US stock market are both going to rip. So I'm hopeful that actually things will be more optimistic. The president of China made a visit in recent years to California. I thought, and I was hoping that would lead to more prosperity. Look, I massively want US and China relations to improve. I'm a Tesla shareholder. That is incredibly important to me. We'll see if it happens. I think that both nations know they need each other, and I'm optimistic overall.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.